what we have learned is that banks don't like trade finance because it's a high servicing product. So they pretty much like to extend loans to the suppliers, to the exporters, that they will service once a year. Banks are very good in assessing the credibility of the suppliers, but their internal systems and the software technology is not up to date to provide a seamless experience on invoice discounting, for example. That's why there is a conflicting point of view here. There is a supplier that would pretty much like to have trade finance products because that would not impact on their balance sheet, because that would be the sale of an asset rather than the increase of liability through loans. So, but on the other side, you got a bank that doesn't like to do trade finance because, again, it's a high servicing product and they do not have the technology in place. That's why, for example, partnering up with innovative players like fintech could be a win-win situation for everybody: banks, suppliers, clients, and the fintech players. Is it possible now? Well, unfortunately, the answer is not yet, because as I mentioned previously, the ecosystem on the distributed ledger is not open for non-bank institutions. So this is my provocation here. If we truly want to make it a all-inclusive ecosystem, then we should allow non-bank players to join this traditional ecosystem.